Welcome, 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 everyone. I'm so excited today to have Raymond DeWitt, we like to call him Ray, to talk to you about some very interesting um, areas of taxes, 1031 exchange, which works well for properties, DSTs, which work for a lot of different things. And Ray's been in the business for how many years, Ray, have you been in the business?
Uh, they're like 27 or 28. I'm losing
Yeah, see,
track.
like that. And hi, I'm Peggy Beauregard, the Nest Egg Builder, and we have been working with people, having them build their portfolios with properties and different kinds of investments and learning how to protect themselves by a one-day course that teaches you what questions to ask and which you usually don't find on the executive plan. So it's really important to know what is important to you and then how to protect yourself so you know whether to invest or run, as we like to say. There's too many things that will make you want to run. And then you get into some real estate, and we love real estate. And a lot of people I know start off in real estate and they'll be in a single family and they'll buy three or four single families, and then they decide they want something bigger. So they want to sell all of their properties. They work with a real estate agent instead of working with a 1031 expert that would tell you, go find the property you want first, put it under contract, and then let's see if we need to sell one property, two properties, or all the property and do a simultaneous exchange so that you don't get audited by the IRS. So what do you think about that, Ray?
Well, I mean, I'm in a little bit different world in the 1031 exchanges. Most people
Okay.
they are coming to me with 1031 exchanges, and I am not a qualified 1031 accommodator. I just help with the replacement property, and I work with a very unique passive program called the Delaware Statutory Trust, and
Hmm.
this is a uh, basically it's a specialized trust that is a fractional ownership, passive income, and the IRS recognizes it as eligible for 1031 exchange. So someone would sell their real estate because they're tired of being a landlord, let's say, is reason they're tired of the terrible teas, the toilets, the tenants, and the trash, and they'd like to retire, but they don't want to pay taxes.
Yep.
They like to keep the tax deferral going, and they want to keep getting income. So a
Mhm.
DST, for short, is a great solution for people. We have an entire portfolio of different properties, different types of assets, storage, multifamily, industrial, even like mineral rights, all sorts of stuff all over the country that people could pick and choose from. And these programs typically provide, income starting the very next month. You participate fully in any growth when they sell the property. It's truly 100% passive, and it's typically very high quality, fairly conservative real estate.
Okay. Yep. I know a little bit about these. Very little about these. I know that you there's all kinds of different choices you have. Isn't that true?
Yes, yes, I do. My broker dealer, we actually have a dedicated team that they vet these different sponsors and the different offerings. We try to work really hard to protect our clients from, having the deal blow up. I mean, obviously nothing's guaranteed. It is real estate investing still, but we work really hard to vet these different investment companies. Like, hey, have they actually returned capital to investors? You know, and we try to err on the side of caution, and feel these investments are tend to be a little bit more conservative from the standpoint of the asset they're investing in. I like to say this is keep you rich money, not get you rich money. They're really designed for
Mhm.
asset preservation.
Okay.
Mhm.
Right. So these people that are just starting out, that's when they get ready to more or less when they're thinking about retiring or this is not the right path they took. You'll find
Yeah, I
those kind
mean,
of people too, right? They're
yeah,
like,
like everything, not everything is for everybody, right? So, most people who are investing in the Delaware Statutory Trust, they're retiring from being a landlord, quite a few of them,
Mhm.
which could obviously be, being a little older. But I'm getting more and more younger people who just don't want to deal with the headaches of it. And they
Good.
look at the DST as a great option. Like, wow, I can make just as much money um, without doing anything or having any bills or I get a paycheck every month. It's great, but there's a couple other reasons people use the Delaware Statutory Trust, and one is maybe their exchange is failing. Property they
Oh,
want to buy, it's real estate. Shit happens. Part of my French, but that's what how it is in the real estate business. And maybe the deal's got asbestos, your property's got asbestos in it, or the foundation's cracked really bad. Who knows what the issues are? You just can't work out a deal with the seller. And your exchange is going to fail, you're going to pay in taxes. So DSTs make a great backup option, but they also make a great option if you don't spend all of your money, right? If you sell a $5 million property and you found something for 4.5 million, what do you do with the other 500 grand? Well, it's pretty hard to go find another commercial property for that little bit of money.
right.
So a Delaware statutory trust is a great solution to 100% complete your exchange, keep the money working for you.
Exactly. Yep. We like all of that. Well, and then what you said about the 1031 people is because they are not working with the right people that understand you always find your property first. And they should be talking to their customer about a DST. So I don't think that the information of what you do is out there for real estate agents to understand that there are lots of choices. And most real estate agents know very little about 1031 exchange. And then they tell me, oh, we can't give legal advice. And I'm like, you have a you have a license. By law, you have a fiduciary responsibility to explain all of these things to them, including the ways title works. Anyway, so I mean, never mind, I've got a million stories on that. So, but you're also in the tax field.
Oh, I call tax advantage private equity. I'm not a
Okay.
CPA, and any thing I
Mhm.
say to you, please confirm it with your CPA.
Absolutely.
Um, but I help people invest in things that give them tax breaks, and the DST is one of those. They give you a tax deferral on the sale of real estate, but I also do a lot of other things where people can offset capital gains from business or stock or crypto sales. Or if you are a high income and just want to reduce your income, there's a lot of strategies we have. And I like to tell people pay yourself, not the IRS. And so I literally have investments where you can invest in this, probably get cash flow, probably get growth potential in the investment, but you're going to get some type of a tax deduction that's going to offset your taxes. And sometimes the tax breaks are so big, you literally make a profit just from the tax break. Um, Otherwise, you could just pay the money to the IRS. They typically do not pay any distributions or ever return capital to anybody, um, and the money's gone forever. So I would rather put it in an investment where I get tax breaks, maybe I get some cash flow, some growth, and I didn't pay the IRS. I mean, that can't really say infinite return in the securities world, but I said it. Um, the money was gone. Now you have it
Yeah.
back, so
Can you
it's a
give an
win-win.
example of like something that one of your listeners might be interested in giving you a ring because you're doing something that they thought
Yeah,
was very
we
interesting?
have there's a lot of different investments from oil and gas to citrus groves to wildlife to
Hmm.
bonus depreciation in real estate. I'll give you an example, or even we're going to be offering here shortly even a shipping container um, investment, which is pretty incredible. But an offering we did last year, one of the firms I work with, not me exactly, but they did citrus groves in Florida. And the
Hmm.
way this was structured, and it's all under the tax code, we are conservative. We're not doing listed transactions. We're not doing conservation easements. We get tax opinions before we even put the offering together. In fact, we have a staff of actual tax lawyers that help advise us on putting these programs together. The citrus groves going to be like, let's say, a 4 or 5 to 1 tax deduction. So if somebody invested $100,000, they're going to get a $400,000 to $500,000 tax break. So if you're a higher tax bracket, 35% or whatever, and you're able to get a $500,000 tax deduction. I mean, that's like 120, $150,000 in
Right.
literal tax savings, but you put in 100 grand. So you made 150 grand. So you've already got your money back plus profit, and now it's in and the taxes in your pocket. Oh, and by the way, if the citrus groves, they sell the oranges, and there's potential, maybe a little potential profitable exit down the road. So that's all icing on the cake.
Sure.
A lot of different stuff. We do convenience stores, we do car washes, but we set it up as owner operator, so it's business revenue. So even W-2 can take this bonus depreciation. They're about a 2 to 1 is what our target is. So 100 grand gets you a $200,000 tax break, and then they're cash flowing 5 to 7%. Um,
Okay.
so literally, that's almost like $80,000 in tax savings off $100,000 investment.
That's huge when you really
Yeah.
think about it.
So now you're at risk of your $20,000 at that point, and if those funds cash flow for a couple of years, you got your money back
So this is
all the
like,
way.
is that like being, so it's a DST, but it's an investment in, let's say, the
It is
citrus
not.
grove.
It is not a DST. We
Okay.
structure these as partnerships.
So this is more of a limited partner
Yes. Yeah.
position.
Hmm.
Okay. So they get the depreciation, the cost seg, because
Yes.
you don't
And
get
with
to
the
depreciate the land, but certainly you've got the whole grove to depreciate.
Well, it's an operating business, and there's a
Sure.
whole Section 754 of the code
Okay.
and Section F, and I don't know, it's all over my head, the exact ins and outs of it. It's but yeah, so a lot of different things with that. The bonus, obviously, the bonus depreciation, but then other things like oil and gas, where you get intangible drilling costs and some depreciation. Wildlife, which you can get livestock depreciation. That's actually a really fascinating investment. Um, all these different things can be used to reduce your income taxes, short-term capital gains, long-term capital gains. And speaking of capital gains, I also do, qualified opportunity zone funds,
Yes.
which
Good.
be effective come July 1st this year.
So that's they held it for 10 years and now they don't have to pay a capital gain when they sell that property.
Correct. I mean, you still have to pay taxes from the sale. However,
Yes.
benefit one is you get to defer the taxes for 5 years.
Right.
So I tell people, look at this as an interest-free loan from the IRS for 5 years to use that money to invest it, to make enough money to pay the taxes that you would have owed them. But at the same time, after that 5 year period when the taxes are due, you get a 15% discount off what you would have owed.
Hmm.
But on your new investment, so all your new gains, as long as that's held for a total of 10 years from the date of your new investment, it is now tax free with no strings attached. It's a really
Exactly.
powerful program.
Yep, that was a good program. I think that they started that back up again, the opportunity zones.
Yes, it's been made permanent and it starts again July 1st.
And what's
So
it called now?
just the same thing,
Oh,
qualified
it is.
opportunity zone.
Okay.
They just made it a permanent rolling thing where before it was so many years and it
Oh,
sunsetted. Well, now it's
okay.
5 and 10 years from when you
Okay.
make your sale. So
Great. That's terrific. So is there anything else what kind of, so we know that you're looking for, or they're looking for you, if they have if they're paying any kind of taxes and they've been investing.
yeah, I would say you do need to be qualified as an accredited investor, which is
Okay.
simply $1 million net worth or 2 to 300,000 dollars a year in income, either or, not both. So if you are a high income earner, whether you're W-2 or 1099 or wherever that's from, I can help you reduce your taxes. Oftentimes people max out their 401ks. You can only buy so many over 6,000 pound vehicles, or there's only so many things you do to offset your taxes, and you have this extra money. What do? Well, invest it Now, don't pay taxes, benefit yourself in the long term. So high income, any type of asset sale, real estate business, stocks, crypto, gold and silver. Um, we can help you find a way to defer or seriously reduce your tax ramifications.
So they don't ever have to really have ever invested before, right? You work with people that have not invested also. They're not coming out of things.
Yeah, I mean, a lot of people, especially if they're, just trying to reduce their income taxes, oftentimes they're just making a cash investment into something to
Okay.
receive the deduction. So,
And do you also work with like Roth and 401ks and
yes, I can help people do alternative investments if they want to look at doing these, real estate, oil and gas, precious metals, wildlife, through an IRA type of a program. And we can
okay.
also show people how to, if they would like to convert their IRA to a Roth IRA. When you do that, you have to pay taxes on that balance, but now it's tax free going forward. Well, I have strategies to where we can reduce those taxes upon conversion by up by 50 or 60%.
Yes. Yes, we've
So,
helped many people with that. So I totally understand how you do that.
yeah. So,
Yes. Yeah, so that's really great. So yeah, you really could help people who want to grow their portfolios or have a portfolio because they don't have one, and you can advise them which way to go and tell them about their tax situation. Now you must work with their CPAs because you said you're not one.
sure they consult with their CPAs. If their CPA doesn't understand it or they feel they don't have a very good CPA, which often is very common, unfortunately, many CPAs simply just file your taxes for you. You want to work with a CPA who does tax planning.
Yes,
People don't
strategies.
realize taxes eat up such a significant portion of our wealth. Um, it'd be quite a burden on people, especially over the long run. So yeah, consult with your CPA, but if you need an introduction to a CPA, I know a lot of CPAs all over the country that I work with that understand exactly what I'm doing and they encourage it for their customers.
That's great. So how can people get a hold of you?
They can contact me. My phone number, 801-815-6619. Um,
Okay.
email is ray at 1031dstgroup.com or the website www.1031dstgroup.com.
Okay, that's really, really great. Any other thoughts before we finish this?
No, thank you for this opportunity, Peggy. I really appreciate speaking with you and getting this out to your audience. And hopefully, I can help people really basically have better financial lives.
Well, that's what to us, that's what it's all about.
Right.
We work all our lives to earn money to save so that we could have a decent retirement or a fun retirement or take some really nice trips, and we never know where to turn. Who could we ask? Because your next door neighbor, most people don't even know who their next door neighbor is. So you need to have people in your life that you can pick up the phone and call or send an email and say, hey, I'm fairly new at this, or I haven't thought about this, but we saw your show and we want to learn more. So thanks for coming on. It's really, really important.
Thank you.
You're welcome.